Hi, welcome again to another edition of Market Analysis for today, January 13 of 2025. I'm Gio Bencourt. It is a recording for Vantage Markets, and we're doing it right about an hour and 15 minutes prior to the USA session open. So we're taking a look at the NASDAQ on a daily candlestick chart, and we're looking at the overall the U.S. indices have very clear critical downside levels. If the primary U.S. indices all close below those levels, it dramatically increases the probability that a bear market may have begun. Now, there's nothing close to extreme downside technical readings. This doesn't mean the indices can't rally from here, but it does suggest caution thinking anything resembling a significant low could be in place. So with that being said, we analyze that in technical analysis, a 10% correction is what it can be expected from that all-time high of 22,423. So we do have a 10% from that movement. It gives a reading of 20,180, which is right below the right above this triple bottom that it was created last year at the beginning of November, before and right in the first days of November. So that level will imply that would be a significant low. Right now, so far, the market has retraced from the 50-day moving average. It's bouncing off of that. So therefore, we need to update our levels, and that's what I'm going to be doing here. And when we want to identify a level of support, we want to be able to identify a place where prices have bounced off of that more than once. So it comes to me that this level around here, price has bounced 1, 2, 3, 4 times. So around this level, right, this is where I'm going to place the line. We could come and say that that's a probability when market will come off and rebound. I'm going to leave the same first support at the 50-day moving average because it's been violated, but the market has really rebounded off of that. So most likely, revisit that low if we are, talking about a continuation of this movement, dramatically those levels. So those levels that I'm talking about, significant or dramatical levels will initially be obviously this triple bottom here. So once we have moved towards that level, we have already moved beyond that 10% move from the all-time high in the NASDAQ. So that's where we want to be taking a look at. So I'm going to leave the same level. So the consensus or the direction of the market is continue to move lower. That's what is the rating is. And as far as the Mr. S&P 500, let's identify some of those levels of support. And it just looking towards our left where the market is at, we basically just find this right here. So that's where I'm gonna place that level of support, but this is quite far from where the market is. So we can use that 5,800, which is a psychological round number, as our first level of support, and then the second one will be that one. As far as movement from the all-time high, so we can come in and identify this all-time high, which is 6,147 times 10% minus equals 5,532 points, which is way down here. So taking a look beyond this other level of support, again, we just don't see it. There's nothing really all the way until when the market gapped up right around 5,640 points. And where we placed our first level of support, we see that the price before that had rebounded off around that price. And so obviously our previous resistance turned into new supports, and previous supports turned into new resistances. So that's where we're going to be placing our levels of support for the S&P. As far as resistance goes, well, the second one could be Friday's high, and the first one we could come in and just use this level right here that touches as much candles as possible. So that could be, since it was a support level, now the market is below that, it turns into a resistance level. So that's where we are. Initially, you could also use the 50-day moving average as a dynamic level of resistance if the market is above it, or support if the market is below it. So that's where that's where we're sitting today. Now, as far as Dow Jones Industrials, well, the Dow Jones from this all-time high back in December 4th, the high was 45,171 times 10% minus equals 40,653, and we are pretty much far away from it. So 40,653, somewhere around here. Now, in regards to the level of support, so the first level of support, I'm just gonna use this around here, and the second one, basically this place right here. So that's where we have our level of support. As far as resistance goes, I'm gonna leave the same levels as per se, because it does, it does touches a lot of candles, and also the 50-day moving average is above the market, and we can use that as a probable level of resistance, dynamic resistance. So the consensus, or the direction, is downward. So looking to sell the indices today. Crude oil. Well, crude oil ended the past week above $76 per barrel, and also in technical analysis, we do. There is a way to analyze the market, or the momentum of a market is that, depending on how it closed on Friday and how it opens on Monday, that week could follow suit. So on Friday we closed above 76, so we closed in the green, and today we opening in the green in the London session. So it is looking that it could be one of those days. Now this level of closing above 76 per barrel, it is its highest level since early July. Now, this also comes after a renewed U.S. sanctions against Russia's oil industry, and also in this weekly petroleum status report, the Energy Information Administration, the EIA, said crude oil stockpiles declined by 1 million barrels during the week ending in January 3rd. So we'll get another reading on Wednesday and see how is that playing. So we're saying that there's been $1 million taken out of supply. And so, this could also be that's also part of the momentum to the upside. So therefore, $79 jumps at me as a probable level of resistance, and then 80 because just psychological round number. If we take a look at the past, we're gonna have to go way back to look at those levels. So again, it just matches that $80 level right there. As far as the first one, is again, it's because of the psychological value that it has. As far as support goes, well, let's take a look at support and see where we have previous levels of resistance that we could use now as support. But this one is actually already into the trading range, so we couldn't really use that. So let's use $76 as a round psychological value, which is more than once where you want to be able to identify the level of resistance, and which now is a level of support. So more than once, here's twice that the market retraced from there, rebounded, or traded off of. So that's the first level of support. And the second one, we come and just use a dollar range of support, as again is one, twice, three times. So basically 4 times. So there we have that level of support for crude oil, and the consensus is trading higher. Nat Gas, well, Nat Gas in itself, it traded higher. It opened up with a gap up today in the London session. Now, with that being said, it did trade. It opened with a gap up because this L opens up here and it's trading lower, but it is beginning to retrace. It did a little Fed hake, if you will, but now it retraced. It closed the gap, so that could be positive news because it is retracing now. So $4.60 is going to be my first level of resistance, and then the second one is just $4.80. Okay, now Nat Gas, as it's trading higher, just the cold weather is expected over much of the U.S. In coming weeks, and their National Weather Service predicts that the normal to below normal temperatures are going to be from January 16th to 22nd. So therefore, there's going to be a lot of demand to heat homes and obviously businesses and whatnot. But also obviously demand from Europe, since again Ukraine has blocked all of the gas coming out of Russia into Europe. So $4, it jumps at me as a level of first level of support, and then I'm just going to use the 20-day moving average within the Bollinger Band as my second one, right? So let's see, this could be a reversal trade and just reverse all of this movement to the downside as per the day or per the week, and see we could close higher. Then gold, well, gold has on Friday closed higher. It did open with a small gap up, but now has been closed. It is retracing so far. Level of support, I'm going to leave them as they are, since they haven't been really either buy there nor broken. And I'm going to use this double top here as a possible level of support, resistance. I'm sorry, resistance. So first resistance, second resistance. So far, the appetite for gold will still be there. So let's just say that this could be profit taken, and just make another attempt at 2,700. So still being bullish with gold. Silver is trading lower, much lower than gold per se. So I'm gonna leave the same level of resistance there, and I'm gonna use that Friday's swing high as a level of my first level of resistance, and support is going to be down here, since price has rebounded from here 3 times. So let's use that as probable level of support. Let's see if it has already begin retracing. Let's see if the 20-day moving average within the Bollinger Bands will act as a dynamic resistance and will not let price fluctuate higher from here, and just find more support, more sellers around here, and then making a continuation of the movement downward. So that one, just be careful. I wouldn't say which way to trade it. Then we have copper. So copper, the 50-day moving average acting as a nice level of support for copper. The levels have been just violated, almost not broken. So I'm going to do the same levels for resistance for copper. Continue to be bullish with copper though. It's just demand of it because AI really in all the other applications. Then we have Bitcoin. So Bitcoin can come here and just straight off and continue its trajectory to the downward. It has fluctuated between 95,800 towards the 90,400 level, 9,344 precise. So it's fluctuated almost 4,000, almost 5,000 points. So the consensus could be that there's going to be another leg down. So let's see if it'll be able to break that 90,000 psychological round number, and then just bounce off the 50-day moving average. So that's why I'm placing that support level. So initially, just Bitcoin is a long haul investment. So keep that in mind. Then we have the euro, the currencies that are definitely trading lower. So 105 is going to be our first level of support, and then 101 our next one. The dollar index obviously has a lot to do with this movement, so that's what we're going to be using Friday's open session, and then the 20-day moving average within the Bollinger Bands for the euro. The pound also is getting pounded. This is its fifth consecutive trading session to the downside. Now, has it found a bottom at 121? That could be the case, but you just never know. So right now I'm just gonna use 120 and a half, 123 as the I'm just gonna use the swing high from Friday, and then just the swing low from the previous day of Friday and Thursday. So let's see if that will be enough. We are in the oversold territory in the pound, so let's see if this momentum to the upside will bring it back inside its region. So that could not happen if the dollar index makes another leg up or another attempt to revisit that high that is done today so far. So 110 seems to be where the dollar index has found some of that resistance. Let's see if that will continue throughout the day. That's it for me today. Have a great trading day, and I'll see you tomorrow.